All right. Good morning and welcome in. We've got Jason here as well, and we're going to be talking a lot about all of the mania that has been going on in this market. Some big ticket news items and just overall keeping the conversation alive. We're all still here. We're going nowhere. So glad to have you on, Jason. How you feeling today?
Uh, about as well as someone could with with what's going on. But thanks for having me, Brandon. Always happy to be on Exit Liquidity and chat with you.
Yeah, absolutely. And it's always a great conversation with Jason. And we want to go through, we talk a lot offline on different things going on in the industry. And I've been around for a while. Jason's been in really early. So it's always good at these times to also get perspective from being around the industry for a while. And although it's not always the same, there are some similarities. And then, it's an oddly difficult time in the market right now. I think sentiment wise, even regulation wise, all around, it's, I would say it's on a harder mode than it's been on in a long time. What do you think about that, Jason? Where do
Absolutely.
you stand in that?
Yeah, I've been telling people, I've been through quite a few cycles. This is probably the hardest, most difficult period that I've experienced. And that's saying a lot because, we had FTX, we had Three Arrows, we had the Luna crash, we had the whole Gensler era when everyone was under attack in the U.S. We had China banning Bitcoin. Back in the day, for the real OGs, we had Silk
Yeah.
Road, we had Mount Gox. So there's been like so many attacks on this industry and very volatile periods. But what's so difficult for me about this one is first operating companies during it exceptionally difficult, but also I think what makes this one tough is 10-10, October 10th, caught a lot of people off guard because we still didn't get that really bullish rally at the end of Q4. And then what's made this super brutal was that every industry, every sector besides crypto has been up only and hitting all-time highs, whether that's stocks, commodities,
Yeah.
even global M2 money supply, while we are just falling off a cliff and bleeding day in and day out. So that's been really tough to navigate.
Yeah, that puts the old salt in the wound, as they say, when everything is sending. So often in these cycles, we've been in these situations where you feel so early. You feel like, oh, even if something temporarily is going on somewhere else, the ground that will be made up during the good times will make it still feel like, okay, well, it doesn't matter if some little things happen or consistently presses up 8%. When the time is right, we're really going to be able to capitalize in this other industry. But I would argue, and I think you'd most likely agree with this, last cycle didn't necessarily produce as abundant of a winning pool. And so going from that, if you weren't strategically placed or you weren't strategically putting your money places that were in the right sector, you're now in another bear market and you might be questioning, what am I doing here? Why am I still here? And so I think that's why it's good to have these conversations, because you can't just, in this industry, you can't just do the same thing over and over again or just put money somewhere and just walk away and be a winner just by sitting around.
Yeah. There's been a couple like really tough things to that point. One is like you got to remember that coming into this cycle, this is the most bullish expectations we've ever had because it was like Trump administration, Gensler's out, super pro crypto SEC, um, pretty much like Republican control across the board, meaning that like all the things that used to be barriers were now accepted. And in the past, it was only just like institutional things accepted, but now it was everything DeFi, like everything that was taboo before was allowed. And despite that, we're looking at prices substantially lower, not just from when Trump took office, but from like 5 years ago, 6 years ago. Like it's almost, if you look at just the prices of things, the market is pricing in no progress in the entire industry since Bitcoin's lower now than it was in 2021. I mean, that was 5 years ago. And you'd like to think that like almost every protocol that was still around then is lower now. Some of the things that are doing well, like Hyperliquid, are just emerged this cycle. But pretty much anything that has been around previous cycles is lower than it was. So this is a tough pill to swallow, and it is making people, to your point, Brandon, question like, am I wasting, years in this space but then again, that's just looking at price. There's like a lot of important things happening beyond that. But
Yeah,
yeah,
Peter Schiff's definitely doing his grave dance currently, which is always to be expected.
Yeah.
But just give kind of a quick run of the tape of where we're at with Bitcoin, some of the key metrics, and then we'll move on. We've got a lot of things to talk about, from the IPO season, how it's pulling in liquidity, perps getting approved across the US, several items we'll go through. But just to give a little bit of a line in the sand of where we stand today on Friday, we just had Bitcoin lose 61,000 today and be tapping on the door of 60,000, a huge psychological level. We have now dropped below the 200-day moving average a couple times, and that's a huge marking point. The cycle theory seems to be holding very strong at this point. We've run into now the expectation would be end of this year would be the traditional cycle run up or the bottoming where we would turn the corner. Everyone was somewhat wondering these last couple months, is this going to break the normal cycle? Are we going to press out of this zone? And man, did sell in May, walk away show up right on schedule.
Yeah, it's great recap there. And it really seems to be following the 4-year cycle pretty identically. Like, even if you look at that recent like bounce from 60 to 80 and now the dip lower, it's like pretty uncanny that still holds. And it's really funny because each bear market, there's a new headline, whether it's China bans Bitcoin, or FTX is collapsing, or Luna's collapsing, or Three Arrows. Now it's Saylor, right? And whatever else is happening. It's always a new headline, but it's almost as if the price action dictates the headline, not the other way around. So it's like the market's programmed to fall, and then people are trying to figure out why that was. So then all these things, come up. And I'm not saying they don't play a role in it. Obviously, like FTX crash and like all these things play a massive role, but like it's almost as if it's destined by the 4-year cycle to hit certain levels. And then we're left here like trying to apply explanations to it.
Yeah, one of my I'd call him my quant at this point. I wish I followed everything he said. And I'm Kazi.
Yeah.
He has always said that since the early days of knowing him. He said, I don't care what headline is coming. Before the headline comes, the market and the chart will be showing you where we're going. I know where we're going, and I just expect a headline to hit in the moment on the chart. It makes sense for it to hammer us down, or the moment of the cycle. So it's really interesting because he's been so dead on for, I don't know, I think it got in 2015, 2016, and he is so dead on. And he even said it coming at the end of last year. He said, say what you want until the cycle is broken. I'm playing it like it is always the cycle. And what happened? To the day when the cycle was supposed to wrap up, October 10th was within a day or so of that, and nothing's been the same since.
Yep. And once again, like these things obviously had effects. October 10th, 10/10, massive liquidity drain. We still haven't fully recovered. And now the Saylor sell-off, and you could attribute it to the AI boom and these IPOs sucking liquidity out. Like, there's always a million explanations, but there's been one thing that's held consistent through the start of crypto. It's been the 4-year boom and bear cycle. Bear and bull cycle.
Yeah.
And people might ask, well, why is that? Well, it's predicated around the halvings and the supply and demand. Why it's always like the same is still like no one knows exactly, but that is a key event every 4 years. The amount of Bitcoin that can be introduced to the market through mining rewards gets cut in half, and that affects supply and demand. And the market always trades based off of that. There were some differences this year, like we hit an all-time high in Bitcoin before the halving, but that was because of the Bitcoin ETFs. But the rest of it played out as it should.
Yeah, I didn't realize that this was the worst week since July 2024. We had a 14% drawdown, and we had, looks like, over 1.1 billion was wiped out in liquidations from leverage in this last 48 hours or so.
It's that's crazy, man. And that's also a thing too. Like the liquidations have just gotten worse and worse over the years, which is showing you that there's more money in the system now, but there's also more people leveraging it, and not just buying spot anymore.
Oh, 100%. We have, and just to point out for everybody, the big marker that everybody is looking at and is a line in the sand a lot of the time over a lot of cycles is the 200-week moving average. So that is 61,600 that was lost today. So that will be something to look at on the weekly, monthly time frames, how the market responds to that. And interesting enough, looking at things like prediction markets and things that tend to actually be a pretty good line to where things are going.
So,
a lot of. Oh, go ahead.
No. I was just going to say, like the 200-week moving average that Brandon's referring to, which is an indicator of, like if we're holding momentum or not, because it's the average price over the last 200 weeks. So if you're falling below that, it's like the market's underperforming. Like it's not going up, right? It's losing momentum. That's why that's such an important mark. Historically, when Bitcoin's hit the 200-week moving average, it has been an amazing time to buy, but not right away. Like this is not just going to be a V-shaped recovery. It takes time. But a stat that I read, or that's pretty widely known, is that if you fast forward 12 months from when Bitcoin hits the 200-week moving average, so 12 months from now, it's never been below that price. So that's an indicator of it might be a really good buying opportunity. But that's for the medium term. That's a year out. In the near term, in two of the cycles, it's fell roughly like 25 to 30% below the 200-week moving average. So what this is telling you is we might still have downside in the near term, but if you have like a decent time horizon, like 12 months or more, it's historically a pretty safe time to buy. Now that could change at any time, but that's been what history has said.
Yeah, I think I even saw a Ledger post about that the other day. Ledger Status, he was saying basically once you hit the 200-day moving average, that would be the time you would begin cost averaging in. Also assuming that medium term time frame, because it doesn't necessarily sweep out of that, but that I think it was 2 out of 3 of the last cycles it hit, and it kind of dragged through and under and then out, and then one of them it actually somewhat V-shaped out of there. So he basically said from here down, William Watson says the same thing, everything underneath the 200-day moving average is where a lot of smart investors are tending to enter back in, so that they're not getting into a position where they're trying to catch the absolute bottom, because this is when it starts to potentially gain strength over the coming months to work its way back out.
Yeah. And I'm just pulling up some charts here, but absolutely. Like it's really tough to perfectly time the bottom. So you'll see like DCA, people who have some dry cash or stables will be DCAing here. And another thing is that there's now 51% or over 50% of Bitcoin holders are now in unrealized losses, which is another huge, that tends to be a huge signal that we could be near the bottom or getting close to it, which is when the amount of people in profits versus losses unrealized starts flipping to losses. So it's like the average person who bought Bitcoin is down, which is crazy. So we might be, but historically that's kind of marked close to the bottom. So that's another interesting data point.
That's actually wild to think about, being at a marker of 60,000, which is just slightly under last all-time high. There's just the cycle before, which feels, I mean, maybe because we've been around, it feels like yesterday was the moment we were hitting that, and that much buying has happened over the top of last cycle's all-time high. So that was, I mean, that 50% of these people have bought since last cycle, like since we've crossed that moment, which was only a few years ago now when we crossed 69 again.
Yeah, well, there's two things there. One is like last cycle brought in a lot of retail for the first time. And then people tend not to buy during the bear market, but then they FOMO in. So that's one thing. But you also got to realize with that stat, it also could imply that early holders are selling, right? Because it just needs 50% of the current holder pool to be above. So that's either a new person buying higher or an old person selling and no longer being in the pool. And we know that a lot of the OGs dumped above 100K, which looked, or at around 120, a bunch of like the earliest whales were selling, which looked like amazing sells in hindsight. They timed that perfectly.
Yeah, it is really interesting. And when I look at things like what you'd mentioned, which is MSTR or MicroStrategy, and there's been a lot of debate about the impacts of somebody who has become the guru of Bitcoin, the never sell, diamond hand, literally makes fun of people on the timeline who are selling, comes out and first warms the market up with, we're gonna sell something, we're gonna make a sell, which the market somewhat reacted but left it. But then the filing came out and it showed they made a sell. How much do you think that realistically impacted the market, even if it's on the psychological level and not just obviously the financial level? It's not that big of a deal.
Yeah, so Saylor did this once before in December 2022. He put out like a small sell on Bitcoin. Everyone freaked out. The difference was back then, 48 hours later, he rebought it. And that actually marked the bottom of that cycle, which is interesting. This time, he did it for 32 Bitcoin. I think it was around $2.5 million. And everyone seemed to freak out. Once again, like based on what we said earlier, who knows if that was the full reason for the drop? Like it was probably programmed to drop regardless, but that's a nice talking point that everyone blames it on him. Like I have a few thoughts here. One is that I think what Saylor was trying to do, and I could be wrong, it seems highly unlikely that they miscalculated their cash on hand so much because he just bought the month before. So it's like if they really needed that money to pay off an obligation, you would think he would have just bought 32 less Bitcoin. Like that's a drop in the bucket of what they hold. So it seems it's not just Saylor running this operation. This is a publicly traded company. So it seems like very unlikely that they completely mismanaged like their balance sheet and actually needed to sell it. What's more likely is like, damn, we're $2.5 million short. Like you know what you have coming up in terms of what you owe. What seems more likely is that he was testing the market a little bit, because when one entity, his whole business model, the whole premise is that he's accumulating an asset that has a market value. If he can't sell that thing, then the whole thing collapses, because no one will continue to lend. No one will continue to have faith in the system that he's building. There needs to be liquidity, meaning the Bitcoin he's holding needs to have the ability to be redeemed for cash for the whole thing to continue. So I think he was trying to show that, hey, I could sell anytime I need to, but it actually backfired, because now in people's mind, they're like, this dude only sold 32 Bitcoin and the entire space erupted. He's now holding 5% of the total supply of this. It's like if like, I'll use the analogy of meme coins. It's like when the top holder of a meme coin on like bubble maps that everyone knows is holding a shit ton. Like if he lets out even like a few dollars, like everyone dumps because they're like, all right, the whale selling. So it's like,
Yeah, Deb selling,
he's
Deb
in,
selling. Get out, get out, get
yeah,
out.
he's in that
Yeah.
position now where it's like even this sort of thing. And once again, I don't think if it was a roaring bull market, like this would have happened, but he did it in a very like antsy market where like, right when we're like testing support levels, he decided to like experiment. So, it didn't work out.
Yeah, timing wasn't ideal. And at that point, I wonder if hindsight, he's thinking, man, I should have dumped a lot more than that. And just like, I probably would have gotten the same reaction,
Yeah, and you would have
dumping tons
got some
more.
cash. So also thinking like, imagine he like shorted Bitcoin and then like he's in such a position now, like you could like short Bitcoin, sell a little bit, and get a huge profit off of that, and then
Get a
buy it back. Yeah,
monster insider trading. Just absolutely. Well, who knows? I mean, the way that things are these days,
yeah,
there's enough ways to do it that it wouldn't shock me if all sorts of things that we wish weren't happening
yeah,
are happening. But the side story that I thought was pretty interesting attached to this, which we'll go into our next topic, but before we switch to the perp side, the prediction markets, it was Polymarket specifically, they had an issue where the difference between the settlement of when it actually got sold compared to when the public found out it got sold crossed the month, to where I think it was like May 29th or May 30th, something like that, they did the sell. But then the report came out on June 1st. And so there became a huge dispute around this person who put, I think they would have gotten paid out $200K on this bet. And Polymarket ended up choosing June 1st over the date that they actually sold. And it's been a huge, I'm sure you've seen it, it's been a huge argument on the timeline around prediction markets and the way they're doing business.
Yeah. So huge controversy because it was a massive payouts on the line of because it was a huge underdog for him to sell before May 31st. So the payouts were massive. I think the argument from Polymarket side was that we can't monitor, like they said, it's based on the date that the information becomes public. Otherwise, it leads to huge issues if like they're having to determine these themselves. So, and their argument was like this could lead to like horrible consequences in most scenarios. So we base it off of when this information is made public. If that's regardless of when it's sold, if it's made public in an announcement after May 31st, it doesn't count. If it's made public before, it does. Obviously, the people who bet or who predicted, their argument is that makes no sense. When it's announced, the bet was, will he sell before May 31st? And we have proof on chain that he did. I tend to, where I lean on this, not that it matters, is that they clearly won the bet.
Yeah.
Like he clearly sold before May 31st. There's zero dispute. So regardless of like when that's reported, because publicly traded companies never report in the moment. They always report after a filing date. So how can you not count an event that occurred because it wasn't made public until a later point? That's a horrible precedent. If you're going to rule that way, then the prompt needs to be, will this be reported that he sold before or after May 31st? Yeah. Not did he? So I think it's pretty black and white, and they have more than enough cash on hand to pay this out. So I think just for, good sentiment and posterity, you got to just pay this out and make it clearer going forward.
Yeah, that's what has been the problem is even with the death markets thing for Polymarket, back when they said, would this dictator be removed before this time? And literally no dictator ever gets removed without being killed. It's this backtracking of after the fact being, that's not what we meant. But the wording is very straightforward on exactly what it is and has no exceptions written out. It has no anything. And just like this, it has no based on reporting date, blah, blah, blah. Yeah. They have to realize, as much as they don't want to, that their word is somewhat law at that point. And the exact wording you have should be the exact outcome. And you have a very legitimate case as the bettor to say, My version is exactly what was written. Your version is a fluffy, created narrative that is in writing nowhere.
Exactly. I think it's so important because we're just kind of reaching the stage of like breakout adoption of these things. And when that many people have that sort of experience, it becomes an issue. And it's so black and white in my mind. It's it's not when someone reports something, it's when something happens. Now I guess one other argument could be like the bets resolve on May 31st. So if there's no way to know something happened, you gotta assume it didn't. But there's proof of when it comes to the blockchain, that's the beauty. There's proof on chain. So these things either need to be prompted better, but in a case like this, you gotta just honor the what clearly happened, in my opinion, just for the sake of like people having a good experience.
Yeah, I don't like how many arguments they're getting in and publicly having to battle large amounts of people banding together against them every time death markets and now around these dates that don't even remotely seem like a legitimate. There's not that many people on their side. It's not a great argument from them, and to me, it I don't know the numbers behind this exactly, but it feels to me that Kalshi's slowly pivoting and taking over, and feels like they're about to eat Polymarket's lunch, especially now that they were one of the first to get perps live in the US.
Yeah. Yeah, no, it's very interesting. You know, people, I don't think these markets are winner take all. I think like a great analogy is like payment apps, like people use Zelle, they use Venmo, they use PayPal. Like I think there's going to be a lot of these sort of financial speculation type apps in the future because it's such a big market. Like it's all people want to do. So you're going to have the crypto versions, you're going to have other versions. There's going to be multiple winners. They're going to specialize in different things. So you're already seeing people will trade perps on different venues. Hyperliquid, now some of the prediction markets are getting it, like Kalshi. Social apps like Arena and stuff we're doing are deploying it. So it's going to come down to like people are going to have different venues that they want to trade on and do these things on. Just like there's a bunch of different centralized exchanges in crypto. Not everyone uses the same one. So I think we're going to see these things go back and forth. Kalshi might surpass Polymarket now. In a couple months, it might be Polymarket. It's just going to be a game of like innovation and carving out their sort of lanes here.
Yeah, what I've liked about what Kalshi's done, being from the US, is their US their heavily regulation based US approach, where Polymarket, you're running two separate platforms, two separate markets. One is a way reduced amount of bets, and then one is a much larger scaled out thing internationally, where Kalshi both have their benefits. It's worth betting both because they have different numbers and there are ways to get slightly better odds on each one, or slightly different framed questions. But I do like that Kalshi has really focused on continually getting the US market involved while still keeping the international. So you don't have split liquidity pools. You don't have different pools and different bets depending which country you're in, at least in the major countries. So I think that's pretty cool. When you look at perps, and I say Kalshi, but overall, the opening door of perps onto, I think I saw Coinbase got approved just the other day. Kalshi started it. Seems like the roll is happening. How do you feel about perps getting rapidly approved across the US?
Yeah. It's huge. I mean, these processes of like getting a completely new financial market that's highly speculative, getting approval used to take forever. And I think the current administration in the US is, regardless of the reason for that, right? Because there's different motives, but they're fast tracking a lot of these things. And it's leading to, listen, like the job for a regulator like the SEC or CFTC or whoever's governing these things is supposed to be to protect the average user or investor or retail person. So they normally are very hesitant about things where the public's going to get fleeced. That's why every casino needs a gambling license, right? That's why these things exist. And perps is one where, you know, notoriously, like, a lot of people do perps who probably shouldn't. They're not sophisticated traders and they lose a lot. These prediction markets are now towing the line. Like, is this sports betting? Is this gambling or not? And we're seeing a very like hands-off approach now by the government, to the point where even in the upcoming SpaceX IPO, they dropped the amount, the minimum that you could invest down to $2,000, I believe, from over 20K. So they're really catering to like retail getting exposure. It used to really be accredited investors or qualified people getting exposure to these things. So I have my views on whether this is a net benefit or not. I think like this is where the world's headed. So it's better that there's more inclusion than less. But you know, there still needs to be, you know, proper like structures in place.
Yeah, to give an idea for people, the CFTC is currently has pending and is reviewing also XRP, Solana, Dogecoin, Stellar, Shiba Inu, Hedera, and each of them needs their own approval. So there, it looks like from the FTC chair, Mike Selig, he mentioned it could be, those could start being approved as soon as within days. So to give an idea of the perps volume, there were $90 trillion in global volume last year, and almost all of it has been offshore until now. So none of the U.S. market / none of it in a way that people know they're in the U.S. market, which would be hyper liquid. So I think, what does it look like to you in your mind? I mean, I think at this point, my big thing is, what's it look like if Hyperliquid does get the approval? Like, that's got to be up there in some of the conversations that are happening here with the pace it's growing at.
Yeah. So I think Hyperliquid is in a period of regulatory arbitrage where this isn't clear, and they're benefiting from that. I think Hyperliquid's recent moves are telegraphing that they're going for this. So they've partnered with Circle USDC, the number one like onshore US regulated stablecoin. They partnered with Coinbase, right? There's a lot of regulators now talking about, I mean, the head of the NASDAQ, just the president of the NASDAQ just spoke highly about Hyperliquid. So like, these are all signs like they're embracing this. I think Trump even mentioned perps recently. So it's like, to me, these are all signs that like no one's shunning or stigmatizing like Hyperliquid. They're being embraced, and they're putting the pieces together, the partnerships together, to carve the way for that regulatory approval. That's what happens when you partner with Coinbase and you integrate USDC onto your platform. So I think it's a matter of time. I think they'll get the nod. The question will be like, well, what does the regulation look like after that? But I don't think like it benefits the U.S. that much for all of that volume to be offshore versus, you know, not within the U.S. So I think they'll get approval.
Yeah, it's crazy to see 90 trillion as a number, and like Trump and the administration has said for years now, their goal is to get business friendly, crypto friendly in the US, and that really ties back to whatever party you're in. The main thought of the more money that is flowing through the country and the company's businesses, technically, the more tax revenue, the more revenue also to the country itself. So that's where you look at that, and you look at Hyperliquid, you look at even within this last year, how many ways it's expanded, whether it's going from purely crypto into crypto commodities. You got HIP-3, which is pre-IPO. You got HIP-4, which is now prediction markets. It's consistently expanding. And I think recently on the Bitwise conversation, Cam from the on-chain research team mentioned that it's over 30% of their volume has
Insane.
shifted over to commodities, and that's only been live since February.
Massive. We're seeing really interesting things happening with the flow of funds. So it's like commodities, stocks, these pre-IPOs. I think the big recent run-up in hype, besides like all of these announcements, including USDC, was because that's going to be the exclusive venue to trade perpetuals pre-IPO for these massive IPOs coming up. SpaceX, Anthropic. So people are just speculating that that's going to be a huge market, and the revenue will flow into the buybacks. So
Yeah, looking at a lot of that different stuff, it is pretty insane to see those different pieces and the amount of volume that's flowing through there, the amount of expansion. And then I think just briefly to look at this, and this is going to end up looking into a little bit of the Zach conversation that we'll flow into next. But before that, looking at what seems to be an evolution in expectation, which I think is very healthy for the market, is this revenue generating companies. Like traditional business metrics have now come over to crypto and are being seen through Hyperliquid and the way they're integrating their token. You're hearing conversations. Even today, I heard from Near on the, I think it was the roundup. He was on. The founder was saying Near is really focused on getting to be a net buyer of their token, and currently has one whole protocol. I think it's called
Near Intense.
Yeah, Near Intense is using 100% right now of their fees to buy Near. So you look at those things and you look at Hyperliquid setting a tone of that, but then these other companies, people are starting for the first time, which I think is very healthy, to reference real business metrics in valuations of these companies. First part of that question is, how are you feeling about that evolution? Second part is, if you look at where we've been as an industry, especially being around as long as 2017 or before, what does that mean for a lot of these companies that are doing nothing and still worth multi-billion market caps at this point?
Yeah. So a few things here. Great. Love this topic. First off, yeah. So very bullish on the move by Near. So Near Intense generated around $1 million in the last 7 days. All of that has gone to buying back Near. And obviously it had a really big, like it pretty much doubled in price before the recent pullback. What Hyperliquid did is they set the tone, and there had been like, they're not the first company that did buyback and burns. I mean, probably the biggest example of this is BNB in terms of buybacks. And that's the reason like BNB with Binance went from like 10 cents to like over $1,000.
That's
They
a
were like,
super. That doesn't get talked about nearly enough. Like Binance has little moments of time where it gets hyped, but you never hear it in a consistent conversation with all the other big dogs in the industry.
yeah, because I know. Well, first off, we're in the West, like out east. There, it's the main thing. But yeah, it's like it's very overlooked. It's one of the best performing tokens in history, and they revolutionized the model of the flowing revenues into a buyback. And the token also gives utility because if you held it, you got cheaper fees. FTX did that also, but no one talks about it with the FTT token. So Sam modeled that after CZ, and had FTX just been kosher and that never happened, and they kept growing like they were, FTX would probably be the biggest exchange ever today, and the FTT token would be, I'd presume, higher than BNB. So that's the evolution of that.
Even just as a cliff note, it's when you see the numbers of the companies and what values they had, the companies that they were holding in their treasury, disgusting to know how much, if they just didn't do the irresponsible things they did, how much money they'd have. Yeah.
Oh, dude, he had some of the best investments of all time. He kind of, yeah, like honestly, if he just like, if that didn't happen for probably another 6 months, like they would have had so much capital. And they'd probably be the biggest exchange we've ever experienced. Like, this vacuum is the reason stuff like Hyperliquid emerged, because like people don't realize FTX was the #1 perps trading venue, and it was growing like crazy, man. Like, but then when everything happened with SBF, people started calling for on-chain perps, where you don't need to trust an exchange because of because of the lack of transparency. So that's just a little side note. Like, that's the reason Hyperliquid is what it is today. That's also how big the perps market is. Whoever wins that, whew. But we're getting a little off tangent here. I just wanted to give historical context that this isn't the beginning of buybacks and burns. Okay,
Yeah.
This is like, there's always been this weird. I'm going to get a little meta here. I won't keep this too long, but I love this topic. Ever since the beginning of crypto, like, there's this like weird dichotomy of like, how do we value tokens relative to equity? Like, there's not a legal framework for tokens. If you're an equity holder, you're actually like a legal owner of the company. Like, if you hold shares, like, you actually have, when I say a legal owner of the company, you actually have a position if the company gets liquidated where you get paid back. Token holders aren't a class of investors in the eyes of the government. Or in the eyes of the regulators, I should say. So there's always been this weird thing where, like, is this quasi equity? If I hold a token, what do I actually get? Is it just like you hope for utility on the product? And people have tried to bridge that gap. And one way to do that is through buybacks, because if you're taking revenue is supposed to go back to the company and its shareholders, and you're routing it into buying back the token. So you're essentially giving a dividend to the token holders. They're not getting direct cash, but like, in theory, the token should be going up. And so that's like where that started. So it's always been this like weird thing to try to figure out where tokens place relative to equity. And then it became even weirder this cycle with DATs and all these instruments, because now you're issuing publicly traded vehicles that are holding tokens. And it's like, what the hell? Like, we're like in this in between where we're trying to like, and then people are talking about tokenizing equities. So it was clearly all going to converge. It just hasn't yet. And there's not a legal framework for it to. So you're starting to see that now. And Hyperliquid is single-handedly destroying the old model, because when you have a company finally do something successfully, so Hyperliquid puts 97% of their revenue into buybacks. So every dollar they make, 97 cents goes into that. It's not going to salaries. It's not going to investors. It's all going to the token. And it's performing extremely well. So how now can you launch a token that has no buybacks and be seen as competitive? And that's why I think, Brandon, that's why I think all these L1s are repricing, because people are like, well, these things just have emissions, and they're like, no one's buying back. They're not buying back their own token. They're just emitting more. So anyway, Hyperliquid, just to speed this up, has completely changed the game, where what is an investor on the open market going to buy now? The thing that puts 97% back into the company and is generating 3 million a day, or this thing that's generating no money, not buying back their token and just emitting more? And that's why everyone doesn't know what to do with L1 tokens anymore, because all it is emissions and no buybacks, and there's no revenue. So Hyperliquid's starting this full-blown transition to like tokens being directly related to the health of the company. If a company is generating revenue, like, a portion needs to go to the token. And it's now legal. This is the last piece of this. It wasn't legal before in the US under Gensler and the old SEC to do this. It is currently legal now in the current SEC framework. So now we're going to see this accelerate.
Yeah, and before we go into what we've got, we'll definitely talk the ZEC exploit and the hard fork. But to stay on this topic, because I think it's a really interesting topic, and it goes to some of the moments that are really important are during these downtimes. It's looking at the bigger picture. What are the regulations? What are companies adjusting to? Because during the bear time is when these companies, the most innovation usually emerges out of this time. People are pushing back. Things are adjusting. Things will be ripped to the floor. There will be if this move continues, you will see multiple companies die out of the top 100 as people put real metrics, business metrics onto them and say, oh, you're Polkadot and you do $1,000 of volume every month. Well, guess what? Your company's done. Like, unless you've got the cash to float it, like, we're not going to value it there anymore. We're not going to hold on to this thing because this gas token isn't even worth 50 cents, or I don't even know, it's $5 now, $3, whatever. But I think this brings up another great conversation, which Hype has also set a standard for, which is, and AI lends to this as well, which is being very lean, keeping your cost structure extremely low so that you can put 97% of your revenue back into a token and still have your company run on 3% at massively healthy pay structures for your employees. That I think they've gotten to 15 employees at a company doing trillions of dollars of volume a year, which is insane. So my question is too, from your perspective, especially in our industry, along with looking at whether it's layer ones or anything, does it also lend to, okay, we've bloated somewhat like traditional business in tech and things like that for massive companies. There's been a lot of bloat into some of these top 100 tokens. Does it start looking like, well, we need to rapidly reverse this because what we need in order to keep this chain going actually does not require 100, 200 employees to do it. And the first thing we need to do is get very lean. Then, and the next thing is to make sure that the revenue and everything we're running can be something where we can press our token, because that is the value. That is where value is supposed to accumulate at this point without being a public company.
Yeah. Yeah, I think you nailed it. So just on the first point, about this new era, I kind of talked about this like a lot, but like I thought like this would be the time that the market started getting efficient, which is what it is. Efficiency means that things start to be valued based off of fundamentals and not just like pure hope and speculation and optimism about what something can be, which is hard to measure. And I think that inefficiency defined the early days of crypto. It's also why there were so many gains to be made, because everyone was like, well, how do I value an L1 network? You know, like, do I value this as if it's going to be the future of the internet? Do I value this based on supply and demand of the gas token? These things aren't generating revenue. Like, what is the metric that I use to assign a $5 billion valuation to this thing? But now, like, we're actually applying like PE ratios because we now have revenue generating products. So it's no longer, so now it's an efficient market. Like, the market generally knows like where things should be valued relative to other things. And that's the first big change that happened. And to your point, Brandon, you see a lot of this really highlighted the most during bear markets, because when there's a drastic repricing of things and a washing of a lot of the froth, like after a bull market, like things pump to absurd valuations just off of euphoria. But then in a bear market, everything comes back down to reality. And the things that survive are the ones that have fundamentals. Everything else gets priced down, you know, exceptionally low. So to your point, so in this new age, what do you want to do as a company? Well, you got to cut costs because you don't need them to be as high. So Hyperliquid proved the model. They only have 11 employees, okay? And they're generating $3 million a day. So they just showed how a team of 11 can generate more than almost anyone in the industry. And of course, you could say, well, not everyone's building an exchange. People are building different products. But now with this age of AI, which can like drastically augment, you know, every aspect of your company, from development to marketing to accounting to legal advice to operations to payroll to everything can be sort of outsourced to AI now. It's irresponsible to have too big of a burn. And then to that point, if we're getting in this age where like you need to buy back your token to kind of be competitive, you got to cut down your operating expenses to adjust for the fact that you need to buy back the token and you don't need costs to be as high to build a successful product anymore.
Absolutely. And I think that's, I forget who it was. It was somebody from Bitwise. I think it was the CEO. It wasn't CIO. It wasn't Matt. It was the other, I forget the guy's name off the top of my head, but he had made mention of that. Like that the future is a lot of these tokens being valued at true values of businesses. And that is the evolution. And a lot of people should want that, because although PE ratios have gotten kind of out of control in the tech world, and I'm fine with that being the case here, it just has to be out of control in somewhat of a realm. Like they're out of control, but they're not to the levels that we see inside crypto. But we'll keep moving. I'm sure we'll circle back to some of these things, but definitely got to talk about the fact that we had an exploit show up that has been around, turns out, for about 4 years, but this critical counterfeiting vulnerability inside Zcash that ended up really getting put on the spotlight after it felt like every big name in CT was shouting from the rooftops, everybody's got to be in on ZEC for the second time, since it was the end of last year with the first run. Then we saw another run up here. How are you feeling going into this? That was a token that's been around the block for a while now.
Yeah, so I think that rocked the industry. I think a big sell-off today is because of that, because that wasn't an isolated incident. What that signaled is no protocol right now is safe or immune from the reason being is that's not the first protocol that an exploit was found from AI and capitalized on. This has now hit major DeFi protocols and a top 10 token or top 20. I don't know where exactly it was ranked when that happened, but that's a top token that lost 40% of its value overnight. For anyone who doesn't know what happened, Opus 4.8, someone typed a pretty basic prompt like, how would I exploit Zcash? And it suggested a way where you could essentially mint like counterfeit ZEC tokens, ZEC tokens. Now, it was a little overblown, okay, because it was essentially one pool that had 2.4 million tokens, and you could only mint more in that pool. And it wouldn't actually add more to the total supply because it was capped at 2.4 million tokens could be removed from the pool. The only people affected by this were people who were in the pool who didn't withdraw quick enough, if there were counterfeit ones created. So this actually, there is a misnomer. This wouldn't lead to like, people are like, oh, how much have they minted over the years? That's not how this worked. But what it did signal is like, wow, AI is way further than we are in terms of cybersecurity. And AI is better at identifying exploits than it is at defending them. And so can I actually trust like anything I'm holding in this industry versus like, should I just own stocks, or like, and I think this was a classic crypto overreaction. But anytime you see a top token that's worth billions of dollars drop 40% overnight, that's a massive, massive sell-off. And what also just rocked the industry is like, that was one of probably 4 or 5 tokens that everyone was highlighting as like the new guard of alts, like the ones holding up. Like everyone was like hype, near, Zcash, VVV, a few others like Collector Crypto. These were like the shining beacons during this time. And then Zcash drops 40% overnight after an AI prompt leads to an exploit. It's just very damaging to morale.
Yeah, this is something to me which you surprise, as much as depending if you've been in the tech industry or not. One of the most unfortunate pieces of the tech industry that you find out the deeper in it you are, outside of crypto, even traditional tech, large companies, things like that, especially if you get outside of top tier, top 5, 10 tech companies and you go into like mid-ish large cap.
Yeah.
There's a lot more they're willing to push the pace a lot more on the innovation side and put money a lot more in that side than they are on the security side. And it does lend to even the largest companies, the T-Mobiles, not to list them specifically, but like companies of those sides with large scale things that are tech forward, but maybe not the Microsofts, the Amazons, and everything like that, even those, but they usually tend to have a giant issue before they super fund something proactively. And that trickles down to everything. If you have the biggest of the big that do that, then you tend to see that much more aggressively in something like a cryptocurrency company, even though it's like security privacy. It's an unfortunate thing that it is very expensive to do security, to make sure your security is really tight, but it's astronomically more expensive to have the issue that you're securing for in the future. But people play the game of, well, I might not have the issue.
Yeah.
And that's not always intentional, but it's the way they put their money into it. Is they are saying that internally, even if they're not externalizing it. So it's not surprising to see things like this. I don't think it'll be the last of what we see. And like you said, I do think it's going to shake when you see a big project like this that's having a lot of success and having money that's around privacy get hit pretty easily. It tells you, okay, is this the first or is this a wake-up call?
Yeah. It's like it's a consequence of the rise of AI that I don't think people were anticipating, because the expectation was, well, if AI is this good at identifying exploits, it's also going to be this good at securing them. But right now, it's skewed to the side of identifying exploits. It's better at that than it is at providing advice on security or guidance on security. Now, yeah, to your point, like security is one of those things that a lot of people overlook until there's an issue. And that's the worst approach, because it's like insurance. Like no one ever thinks something's going to happen, but when it does, you're screwed without it. It's the one thing that can almost guarantee your project gets ruined. And there are examples of projects surviving after it. Arena is a great example. I mean, there's a massive exploit from the first team that drained the whole thing, and then we took over and it survived. But like that's an exception. The overwhelming thing that happened is like what happened with Drift, the perp stacks on Solana, which was their leading perp stacks. It got exploited, went insolvent. No one will ever, it's dead now. So it's like anything that's an existential risk to your company, meaning if it goes wrong, your company will cease to exist, needs to be met with the utmost importance and should have the necessary funds allocated to it. But people don't think about it until it's too late. The smart ones do. Hopefully this is a massive wake-up call. Where this becomes an issue is if AI starts producing things that we can't guard against. And that's where the quantum attacks come in. And then that's not even the fault of anyone. That's just like, oh shit. That's the consequence of so much money being tied into tech products. You only really see that in crypto. Like there's no other place where like this amount of money is tied in, like predicated on the underlying tech of something. Like when you leave your money in a bank, there's other risks. There's not a risk that like the tech doesn't work and you lose everything, right? So this is like a unique problem set that crypto has always had.
Yeah, not quite the same insurances as banks. Even though banks don't do unlimited insurance, they do cover a majority of people's funds at 250K, which I wouldn't be surprised to see those kinds of securities start to make their way over here as these regulations come in place. And I think I saw recently some of the biggest banks are getting approved right now to hold stable coins at the bank.
Yeah, there needs to be mass regulation for that to take hold, because it's the government that bails out the banks. Okay. There's no government bailing out your DeFi protocol that gets hacked. And if there does, if there is, it's going to come with insane regulation. Like the banks, okay, really quick side note. There's like a big paradox here because everyone, or like a lot of irony here, because everyone in crypto wants like full assurances that all their money's backed and on chain and transparent. The actual banks, though, like they only keep 10% of your money actually in the account. The other 90% they invest in things. And if the bank blows up, the government's expected to bail it out. So it's a crazy concept where if a crypto company like that was supposed to be a custodian took 90% of your funds, I mean, this has happened, but when it blew up, there was no bailout. There was just the owners went to prison, you know, like Celsius is a prime example. So it's like there's a huge disconnect between the fields right now, or like what's considered legal in one space and then not in another is comical because it's the same things happening.
Yeah, it's the bank system is an easy one to really it's an easy one to bully. I mean, and that's why a lot of us are here, especially been here for a while. I know the narratives have changed, or why some people are onboarded now could be a meme or a pump fund or all sorts of things. But the core thesis of somebody who's been around for a while has been transparency, the efficiency that comes with blockchain infrastructure for the financial system, cutting out a lot of the corruption that actually does go on with the fact there is no transparency that could go to tax dollars all the way to banking systems, things like that, and just a lot of veil over the eye scenario. A lot of those institutions don't really want you to see exactly what's going on, and it's a big piece of why the stable coins have been argued so heavily around the yield they give to their holders being an issue for banks.
It's a massive conflict of interest for banks, and that's why there's huge lobby groups that don't want DeFi to exist or stablecoins to exist, because I could get more parking my stablecoin in a protocol than I can in a savings or checkings account with my cash. But now, like, so that was always the thing. It's like banks are becoming obsolete because first off, the value of the dollar, the purchasing power of the US dollar has decreased 99% since the 70s. It's the biggest shit coin. It's like a pump fund meme coin. And then you don't even get yield on it when you tie it up into savings or an interest account. So this has been a huge thing, but now the pendulum's swinging a bit because now everyone's like, well, these DeFi protocols are getting hacked and my bank doesn't get hacked or they insure up to 250K, right? So now the pendulum's swinging back to like, oh shit, our bank's actually better than these protocols that an AI can find an exploit and I lose everything and no one's there to save me, you know?
Yeah, there are some aspects that do really matter. Self-custody is still a bit of a hurdle for people, and it is a security risk, especially as let's say you're a larger public figure. I've heard of many of them saying, I transfer my stuff to bank purely out of safety for myself because I don't want. There have been situations where somebody has been kidnapped, has been in a situation where they potentially are going to harm them in order to get to what they know they have access to right now, which is their cryptocurrency wallet. Yeah. For a little while, there was a really dumb thing going around from influencers, which was wearing your ledger around your neck as a piece of jewelry. I think that probably died pretty quick with multiple issues around safety coming up. If your bank account was around your neck and people knew you publicly had money, they're obviously going to do something about it because they're willing to mug you for a $1,000 watch or bracelet or anything. So thinking, even if it's empty, the thought that there might be something, somebody can harm you or kill you on the thought there might be money, especially depending on what area you're in.
Well, we've seen crypto related robberies and crimes proliferate, like grow exponentially recently. A lot of it's happening out of Europe, but this is becoming a massive issue because like all these influencers want to flash how much they have on chain, which I don't know if anyone has a lot anymore after this, but They want to make a public spectacle of like, what they have. A lot of protocol founders, are targets as well, or their families, and very sophisticated like criminal organizations are targeting these people. And the reason is, so listen, there's pros and cons of everything, right? One of the huge cons of crypto is that I could hold you at gunpoint, get your private key, take your crypto, and there's no recourse. Like, it's very hard for someone to like wire the money out of your bank account, because then there's just a trail of where it went to. But it's much easier for someone to, forcefully transfer crypto. And like, this is a huge issue. So between that and now the risk of AI just finding an exploit, like people used to feel safe in these huge DeFi protocols that were audited. Now AI can find exploits in multi-billion-dollar companies. Now people can be targeted in real life for their crypto holdings. All of these things, and then like the simple thing that if you make a mistake transferring it, you can never get it back. All these things are starting to become issues for the public to deal with. And you add on top of that I don't want to be a downer, but now like AI stocks and stocks in general are way outperforming crypto. People are like, why am I going to deal with this? Like, at the moment. Now the pendulum always swings, and crypto will get undervalued and the money will flow back. But for the time being, people are very down on it for these reasons,
Yeah, and that's going to go into the next topic that we're going to talk about, which is the SpaceX IPO. Just before that, though, I want to make one statement that I think is good around privacy, which is I do think that privacy, because I'll say it this way, privacy is important in the future of blockchain and crypto adoption. It isn't important from the standpoint of to hide bad actors and et cetera, et cetera. It's important from the standpoint of if somebody goes and buys a hot dog at a stand and spends $2.50 and they happen to have $3 million in their account, not everybody needs to see that you have $3 million in your account. That vendor doesn't need to see it. So I think people get caught up in the conversation too often around privacy and bad actors, or maybe they listen to Elizabeth Warren a little too much. And the reality is there still needs to be, like, we have privacy when we buy something on our credit card. People don't immediately get to see everything in our account just because we used our credit card. So the privacy conversation is important, and that is a piece of the infrastructure that does need to evolve so that people can utilize it in a regular form of buying things without anybody I interact with now knows exactly what my wallet has. So I have to compartmentalize all of my wallets or segment all of my wallets.
It's an amazing point. Not a lot of people think about this. So I just brought up a lot of the issues with the crypto infrastructure. One is like the irreversibility of transactions. That's good or bad. The people being able to hack these things and there being no recourse, and like these criminal things that arise, these criminal attacks. And what Brandon just identified is another huge issue. That is, once again, there's pros and cons. What crypto allows for is transparency on chain and immutability. The negative of that is anyone who's good at investigating on chain can trace things and know like roughly how much crypto you have, unless like you're completely withdrawing from centralized exchanges. So here's what Brandon's referring to for everyone who might have been confused there. If I go and let's say like we all want to get to a future where I'm like paying for a coffee with crypto, right? If I get to that future and I like, slap down my phone and it initiates a transfer of like, 5 USDC for a cup of coffee, people could then go and say, okay, the 5 USDC came from this wallet. It was funded by this wallet. And imagine they go back and trace it to a wallet that had $5 million on it. And everyone's like, all right, this random guy at the Starbucks has 5 million. I'm going to track him down and, do it. Like, you just doxed yourself. So how can we be in a society like right now, when I swipe a credit card for a Starbucks coffee, no one knows what's in the bank account, to Brandon's point. So to solve this comes privacy payments. and zero knowledge proofs. And one of the big narratives right now is private payroll. Near just did this, and I'm talking to a really like amazing company with this. I actually introduced them to Avalanche. I hope that they use them. But what private payment allows for payrolls is like I could pay my employees in crypto, and no one can trace on chain who's getting what or like where it's going. Right? It's just a lump sum sent to a contract, then dispersed privately. Zero knowledge proofs can also extend to what Brandon's saying. I can pay for a coffee and people can see the transaction, but they can't de-anonymize it. They can't see which wallet it came from. They can't trace it to having more money. These things are crucial and they're not solved for yet. They're starting to be. And this is one of the reasons, even in 2026, we still don't have actual mainstream adoption. When we talk about adoption now, we talk about people holding and speculating on crypto. We don't talk about people using it. And these things need to be in place. You need to be able to buy stuff without people knowing your on-chain net worth. And you needing to like do gymnastics before to like hide everything for you to just go and spend. So super important what Brandon just brought up. Not a lot of people think about this.
Yeah, that to me is one of the 0 to 1 moments for the industry, is that cut between the two. Your, let's say, your savings account compared to your spending account. As money moves, that there is a severed line, and you can just see the transaction. You don't need to see everything. Yeah, it's very dangerous for people that do know, especially as people get more familiar with how transparent blockchains are, and how much you tap that thing, they know your name, first name, last name, and then they know your wallet and transaction history. It's anybody crazy. Who is sophisticated and is looking to scam people could open up a hot dog stand, could open up different companies with the idea of, we need to get as much identifying information from people as possible. Even if you run a shell company for, or just a simple product, get as much information as possible from all these people and get as much small transactions even, just to get the buying pool and all the info. And then the wrong people can do all sorts of things. So data integrity, data security overall, there's so many pieces that we're going to run into here very soon as part of this evolution, the 0 to 1 moment of adoption. And it's going to be really important. And there's going to be a lot of scenarios that we end up talking about here, we end up discussing offline, that we're talking in our circles, because a lot of people aren't using blockchain right now, and they're soon enough going to find out these gaps. And the companies and the people that come in and solve these things, those are huge money opportunities. Those are some things. So many people are caught up on doing the beta of everything. I want to see people come in and fix some of the bigger problems and build companies around that. That's where your huge opportunity is. That's where big money, big volume is going to flow through. But let's get to one of the big money, big volume things coming up here, which is the biggest liquidity thief of right now. People speculate it's the reason the markets are all pulling in and the crypto market is seeping out. All risk on assets are being siphoned from for the IPO, the biggest IPO that has ever happened. SpaceX goes live at $135 a share, $1.77 trillion valuation. Wild.
Insane. I don't know what else to say. I mean, these are the times we live in. I am a little worried that this marks a top in equities. I mean, this is a massive liquidity event in a very unstable market. I do think this is leading to a lot of the contraction Brandon has said recently, which is such large-scale wealth creation events in other sectors that people are pulling money from stuff like crypto because they're getting outsized returns over there. And this is the culmination of it. We have Anthropic as well. And I can't believe things are being valued in the trillions upon listing. It's crazy.
Yeah. You look at a $1.77 trillion valuation, and they just did a $75 billion raise just recently, which is, it's kind of crazy to think of somebody raising just within a week or so of your full-on launch, but these companies are getting massive amounts of cash on hand before these companies even launch. And even had you had Elon the other day, I believe he just locked in that he would do a year before any of his tokens get vested, which is longer than we've seen. It might have been one of the longest in history, but he definitely agreed. Not that shocking, because like I don't think he needs the money or plans to sell something anytime soon. But that was a big news headline, is him pushing off him getting any tokens, or not tokens, stock.
Guy has
for
such a
year.
crypto
Yeah.
mind. He can't fathom that someone owns something other than token.
That's what it is, though. And I don't know. I just look at that.
Yeah,
I
the
look at
dev can't sell. Dev can't sell for a year. I mean,
Yeah.
yeah, but your aligned interests. You always want the founder of something to think something's going higher, and they're willing to put their money where their mouth is.
Yeah, and there's also a lot of speculation going on right now of, will SpaceX, as people are speculating, will we see a merger post IPO with Tesla and maybe even X? But I've seen people speculating on Tesla that there may be a potential merger, and trying to bid that, thinking that that would possibly get a bit of a nudge to the upside if that happened.
Yeah. Yeah, man, I have no idea. Like, Elon Musk never ceases to amaze. Like, he gets a lot of hate, but this is a generational, this is a historical entrepreneur right here. So, what he's building across different verticals, and we're watching the whole thing play out in real time, like how these different pieces play together. It's like, I don't know if we'll ever see something like this again. Maybe in the age of AI, we're going to see things we didn't expect, but this is like insane.
Yeah, I'm not sure. This will tell us a lot about how liquidity flows post IPO. Like, are we going to see a continued absorption? I don't know what the release schedule of IPO investor or pre-IPO investors are at different levels. I haven't looked into it, but yeah, how much of the liquidity from the market just stays in these things or keeps getting absorbed compared to being released into other risk on or other opportunities?
It's going to go one of two ways. It's probably impossible to predict. I mean, people can predict this. I think it's very difficult, but it's either going to be, there could be a really risk on environment where profits from all these like crazy AI stocks, which have been trading like meme coins, flows into sectors that are now seen as undervalued. Like, maybe like crypto got so crushed that now people are like, all right, this is finally the time to bid. Or this is going to mark like a local top for the stock market, which is very scary. I don't want to worry people, but we've seen this type of decimation without, while stocks are at all-time highs. And I think it's very simplistic to be like, oh no, well, if the stock market goes down, that's going to flow into crypto. That's not normally how it works. Okay. So if this does mark the top of the stock market and we've already bled this much, this might not bode well. And it's very hard to kind of predict. It also doesn't help that we're not looking at like printing anymore. Now we're looking at rate hikes, and a lot of cracks are starting to show in the broader economy. I'm not trying to add fuel to the fire when everyone's down bad right now, but these are things to kind of be concerned about, potentially. Or maybe like it's a massive liquidity event that then starts spreading to like other risk on sectors. I just think there needs to be rate cuts for crypto, and like everything's pointing to rate hikes. So, that's not great for the time being. But with all this said, crypto's still following the 4-year cycle identically. Like, we're actually if we follow this identically, like we could be bottoming in like October this year. And then it's not like we V right back up. Then there's like a accumulation period down there. But like, with all this said, like we could just be following a normal cycle here. And it's just like business as usual for crypto at the moment.
That's going to be really interesting too, because we also have midterms coming up in the fall.
That's a huge point.
And that will
That's a huge point, right?
Yeah. So I'm very curious to see. Here's the thing, like the cycle, I'll keep following the cycle until it's proven wrong, but it's hard to look at midterms. And maybe this is definitely my rose-colored glasses, but it's an administration that really made a lot of crypto promises. And at the end of the day, the family also owns a lot of crypto, and their companies are all crypto aligned, Bitcoin mining aligned. It does not, the market seems big, but it's very small in comparison to what the stock market looks like now. It would not be insanely hard to press liquidity into the crypto market if the administration really wanted to show bullish on some of the promises they made going into the midterms. And if they feel like maybe that's one of their gaps, first, obviously got to wrap the Iran war up. If you wrap Ukraine, Russia up on top of that, and then you do get some kind of press up of the crypto market, along with the other market or traditional market already being green and doing well, things can change really quick. It's not as hard as you would think for them to massively press Bitcoin if that's the mode. And part of the camp is you have to think, is this, like Max said the other day on the stream, is this the institutions pulling the boat back, and that we're being faked out in a way over these months, and they're willing to let it go as low as possible to position and get people in and prepare for pressing it back up? Or is it dire times and things are changing? I'm on the camp of things will turn around and things will be good again, but we don't know. Nobody knows.
Yeah, listen, like, I'm a perma bull, like dedicating my life to this space so far. So I mean, like I'm very hopeful for what you said. If I want to play devil's advocate and also like not just have a crypto bull mentality, like blindly, what I would also say to push back against that potentially is like the Trump administration was pro crypto since they got in. I mean, the guy launched a meme coin before he, like 2 days before he entered the office. I mean, this was supposed to be the super cycle of super cycles, and we're sitting here after one short blip, like after he took office, we're sitting here where almost every asset is lower besides like a few in the entire industry. So it's not like, I agree, like there could be a pre-midterm push where like they need this to do well, but like I also don't know what that means, like, because like they've wanted this to go well since they took office. I mean, they own American Bitcoin, is like the top Bitcoin mining operation in America. Eric Trump's been bull posting since they came in office. They ran World Liberty. They had all alignments, and it's been down only. I think Trump Media just sold its Bitcoin, so it's like,
I didn't know that.
Yeah, so it's like, what are they going to do right now that they haven't done already? Like I'm not a huge fan when people say like they're pushing the market lower to accumulate, because what does that actually mean? Like, if you take off the tinfoil hat, does that mean they're selling tokens and then buying back? But like, it's yet to be proven to me that like there's this invisible group that owns like all these like such a large supply of these tokens. Like, this is natural flows to me. Like, this is the 4-year cycle. Like, it's playing out in front of our eyes. And normally in the 4-year cycle, nothing really upsets, like nothing causes a huge fluctuation either way. It's always new headlines. Like I said, China's banning Bitcoin, FTX is collapsing, Three Arrows is collapsing, Luna's collapsing, Gensler's going after everyone, this and that, right? But now it's Saylor selling. It's always a new headline. Oh, AI, like quantum concerns, like AI is finding vulnerabilities. I'm not saying these aren't legitimate, but it's always a new headline and it's always the same price action. Okay. So explain that to me. Like, explain why that happens for the last, since the birth of Bitcoin. And
Yeah.
yeah.
Well, when you look at it too, you always have to consider, and I know this is variable, but you've got to consider the cost to mine Bitcoin as well.
Yeah.
And we've depending on where you're at, there's different costs around the world, but the average cost to mine last time I checked, I think was high 60s for cost. And then I think it can get as low as something like 40 something thousand, depending on if you're in the cheapest energy places. So you're looking at a lot of miners are now underwater at these prices, and that's under the 200-week moving average. So you do wonder, do you see a capitulation event if that holds long enough, or if it extends out past what a traditional cycle would go? If we see end of year, we're still lingering lower than this and it doesn't pick back up, you start to wonder, is there a minor capitulation event? Again, you look at going forward, next cycle, we're talking about a 6-figure cost to mine a Bitcoin. Like it's to me, we're running into this thing. I'd love to get your thought is this the rubber hits the road cycle on this one, where it's either going to cost so much and it just doesn't work and miners aren't willing to hang around for a 6-figure Bitcoin because the price action's not showing? Or do we have ourselves a baked in 2-3x from here because it's always going to be over the cost to mine a Bitcoin?
I mean, not financial advice. Like, it's impossible to time the bottom. Things can always go higher, but we are seeing this could be like, we could be due for unprecedented times where all models break, and like maybe this is like really like the pullback of a lot of crypto and the changing of the industry. But based on the 4-year cycle, we are looking at a lot of signals that of like good buy zones, like a good zones to buy or DCA in. One is like the 200-day moving average that we talked about. The second is the fact that now more holders are unprofitable versus profitable. And then another one is what Brandon just mentioned, which is like the cost to mine. Normally when the price of Bitcoin starts hovering around the cost to mine, it tends to be a good time to buy. Now it could go lower, and that does lead to minor capitulation, because when, just for everyone watching who might not be following this, like when your cost to mine Bitcoin is higher than what the Bitcoin costs, so Bitcoin's price is lower than the cost to mine, that means all miners are unprofitable. When all miners are unprofitable, that means they need to sell Bitcoin and liquidate their holdings pretty much. And a lot of them go under. And when there's a big capitulation event like that, it's like new miners come in, but there's a period where price really gets affected. The way mining works is like then the difficulty adjusts, and then eventually it becomes profitable again. And then like the equilibrium's set. But like the mining's so important. People don't look at this enough. The mining's so important because that is the security of Bitcoin. And if it's not profitable, no one's going to commit computation power to do it. So it really needs to be profitable for the network to operate. Otherwise, there's no incentive to secure it. So huge thing that Brandon just brought up there when we're looking at the market.
Yeah, they're all things we've got to keep our head on a swivel about, because they're all things that impact the industry going forward. They're all aspects that we're not always talking about, but they all factor in and how the whole engine works. So I'm in the camp of that we are, just like from a bottoming standpoint, the cycle has been the cycle over and over again, and it continues to follow. If I'm believing that on the way down, I'm believing it on the way up till proven differently, which is we see a bottoming towards the end of the year, and then we start to see the other side throughout that. If we do start seeing companies be measured by actual business metrics, realistic price earning ratios, or at least tech style realistic price earning ratios, revenue, companies actually making money and then driving value back into their token, and or other ways they look at it, I think if we start looking at things that way, then it will also decouple a little bit. And we've already seen that a bit between Bitcoin, Hyperliquid, and some of these other revenue earning companies. The industry could begin to decouple if we start looking at real business metrics, because it won't matter what Bitcoin does if Hyperliquid's making 20 to 50 to $100 billion, like they're progressively growing at a massive pace. Then why would it matter what Bitcoin's price is if this is a legitimate company bringing massive money in that has no correlation to the biggest asset? So
Yeah.
I think a decoupling is very healthy for our industry too, as some of these companies that are really doing things in the world progress and utilize those funds properly and stay lean. So that's what I'm interested in seeing. Do we continue to see decoupling? And that's the maturation process for the industry.
Yeah. Once again, I think it's about the industry becoming efficient. I'm not saying this is the .com bubble bursting, but like sometimes you need to really rip the Band-Aid off to like drain out a lot of froth and get back to the core fundamentals. And that might be what's happening now, or maybe not. Maybe this is just a normal bear market and then we rip again into a crazy bull market where NFTs, memes, all these things go to infinity. But I do think it is interesting what the market is bidding during these times, and it was stuff that had fundamentals. It was like, and I'm very excited for the next stage of Arena, just to get into that quickly, because it is very fundamentals driven. And we haven't announced any of it yet, so I wouldn't expect that to be factored in to how the company is perceived. But I don't mind this era, because if you do have something that has fundamentals, you're going to last and probably be rewarded from the market. Versus if the next stage of this all, though, is like where the market is still inefficient, is like it's still valuing a lot of companies based off of like what chain they're on or what ecosystem they're in, which is a little weird, because it should be based off of the merits of the company. And I think that has to do with flows. And like, so that is still like, I think, an inefficiency. Like in Web 2, it doesn't matter what rail you're built on top of. Like, it's like, do you have a successful or profitable company or not? Product, I should say.
Oh, absolutely. And I think that's the dreamscape. That's the realistic future, which is the cloud service provider, the infrastructure, whatever that is that your company is built on top of, is not talked about publicly in the traditional internet and tech world. So the future here is whatever chain you're on, that's the infrastructure layer, and that, and internally they know that, because that's what runs your infrastructure. But outside of that, it doesn't need to be a conversation point between consumers and customers and everything like that. It's the tech, and only tech people should care about the tech or the owners. So I'm with you. I think that's another layer of maturity that we should see here. I don't know how many years it takes to get there, or who's the winners, or how many pieces of infrastructure are around in the future. I don't know what that looks like. When the Amazons and things, do they jump on something? Do they create their own? Those are all the questions I think will be answered over the next probably 4 years.
Yeah. And normally, like, the Amazons of an era are born after these sorts of pullbacks. Like, if we do have a crypto winter or like a bubble bursting type event here, once again, I'm not saying that's what this is, but if that is that, what emerges from that, like what emerged from the .com bubble burst, was the Amazons, the Googles, the Microsofts of the world, and identifying that early. And those are fundamental driven. And then they end up being the biggest companies in the world. So, those are the opportunities that arise during times like this.
And it's crazy to think that if you were around back when Amazon was created, your conversation was probably like, this is super stupid. This is a book company that I don't need to buy a book online. And it was, most people didn't have the vision. including me, I was pretty young, but most people didn't have the vision of why they were like kind of testing and building this supply chain that was so strong using the internet that eventually evolved into the buy anything. But it started with a proof of concept, basically, of books. And I think most people thought it's kind of stupid. Most people aren't buying a book company in the early days, but by creating all of the supply chain and then eventually creating one of the best supply chains in the world and internet efficiencies, the speed to get something this afternoon that I ordered, like that's just nobody saw where it was coming. And I think I'm curious to see if we see something like that even in this industry, where something that's not doing the thing that will end up being the thing that makes them huge, they're testing a kind of infrastructure and setup that will then be applied to something else that will make it the next huge thing that we just don't know yet.
It's probably likely that that happens. But it's going to be really interesting to see how this all plays out and how it merges with the broader movements. Because like in the history of crypto, since it started, it was always like the niche, like innovative, like, you know, thing that like the smart people were behind. But now like we're seeing like competing markets like AI. And obviously AI is going to be deeply integrated alongside crypto going forward. But you know, like these mega companies, like they're probably going to incorporate elements of multiple tech stacks into them.
Yeah, and we'll just to wrap things up, we'll just go a couple of quick hit items just so people have a general idea of some different pieces that are going on. So we got US spot Bitcoin ETFs took in a net of 3 million on Thursday. That's 13 straight sessions of outflows totaling $4.4 billion, which is a record.
Insane.
So we also have banks that are going on chain, like we mentioned earlier. JP Morgan, Bank of America, and Citi plan a shared tokenized network next year to fend off stablecoins eating into the bank's deposits. So they're getting in the battle. They're not going with you guys are stablecoins and we're banks. They are saying, if we're doing stable coins, we're owning stable coins and we're making money on the interest and we're utilizing those funds. So banks are coming in. It's going to be very interesting to see the battle between banks and stablecoin companies. That's going to be a whole nother thing. But we also have Clarity Act to watch. July 4th is the big date for that. We'll see what happens. Still about 50-50 on prediction markets, where if people think the Clarity Act goes through or if it doesn't. And then we have CFTC cleared Coinbase for global crypto perps futures, separate from the Kalshi piece. So now Coinbase is getting in the battle. It seems like that's going to keep rolling. And then we talked about BNB earlier. Jason mentioned it. Grayscale filed its third S1 amendment for a spot BNB ETF.
Really? I didn't even know that was happening.
Yeah, so we've got Bitcoin or BNB entering, which to me, again, it's a slept on thing. You don't see BNB in enough packages and things like that in these products. And then I would say the old, almost the cabal play of recent post ZEC and NEAR has been WLD or World Token. That has been something that's been full sending. It seems to me right now, I don't know if you've been feeling this too, it seems like the same characters seem to be banding around these tokens, and you see these same big figures say, oh, everybody ZEC, oh, everybody NEAR, oh, everybody World Token. I can't believe this hasn't happened. I'm starting to notice a little bit of a pattern of all of them talking at the same time in moments, and it's working. So they're pressing those tokens, and then I'd say the big piece that caught people off guard, and I saw quite a bit of this off, whether it was reason from him or not, was Arthur Hayes pivoting and saying he was going to exit some of those big plays, which was ZEC, NEAR, and some of the others very publicly, and seeming like a sell-off coincided with that.
I mean, listen, man, I'm all for like you need to be able to change your thesis at a moment's notice, but like for over the course of 48 hours from you to saying hype's hitting 150 to then dumping your full bag at 75, it seems a little egregious. I know the market like really took a downturn after, but that's a little crazy to
It's
me.
almost insidery. It's like, how did
Yeah,
you dump that and then the market dump hard
yeah.
again right afterwards? And it's not Arthur that's got that kind of motion, but it felt like, did you have some kind of idea of what was coming and you're, oh, let me just back out really quickly?
Crazy stuff, man.
Yeah,
Crazy.
so that was the one thing is looking at some of those different things, I actually saw that he was on with the founder of Near within days of when he was super bullish into dumping it all. I heard the founder of Near talk about it today when they were asking with Mert and those guys on there. He said, whatever, game is game, trading's trading. I'm not worried about it. But yeah, I'm sure it was fun. But overall, just wanted to let's wrap this thing with a bow. The market overall, it's been tough. It's been rough. There's been really the worst week since 2 years back was this week for Bitcoin. But there's always opportunity. There's always places to find innovation. These are times where if you're a builder or you have a great network of people you're getting to know and you think there's worth building something out, be the guy who or girl who creates that next company. Be the person who solves the problem. Be the person that's looking forward at what issues are coming, and then go where the liquidity is flowing. There are so many opportunities out there. There are less during these times. It really matters to be where the opportunity is, or if you're not on every day, find your places to park that are your conviction bags for the future. You know, there's the VVVs, there's the nears, there's the different big ticket items, and just start dollar cost averaging into what you feel are your blue chip plays for the next cycle. Bitcoin, I'm a Bitcoin guy. I'm always going to go into more of that. Choose your things. But Jason, give us your final thoughts here, and then we'll wrap things up.
Yeah. No, Brandon, love what you're doing with the stream. Thanks for having me on to talk big picture things. It's really nice. Yeah, guys, I think we're in very uncharted territory right now with the amount of like movements happening with like new industries emerging, macro considerations, like everything sort of converging at once. I know it could seem overwhelming. A lot of people are in fear right now. Just try to be kind to those and supportive of those around you. You don't know what they're going through. A lot of people are hurting right now. Um, these times tend to be the best to first we need to find a bottom because like there's no point in saying this when it's a falling knife because everyone's very
Yeah.
concerned. When we do find a bottom and it calms down, prices are low, but it is the best time to build and network. And like these are when the innovations happen that define the next cycle. We're already seeing some of this now with like new the hypes of the world starting to push new tokenomic models, the integration of AI and crypto, privacy, um, social interfaces on tops of a lot of these things, which is where Arena comes in. Like these things are very, very cool, and I still think you're on the cutting edge here. I don't buy into the doom and gloom that like this time's different, crypto's over. I agree. Like we have a lot of growing that we actually need to do right now as a industry. We kind of got to pass the first X number of years because it was like figuring itself out. But now, like the fact that there's still like you can't go and buy a coffee and not have the issues we talked about on this stream. You know, like this late in the game, it's starting to become an issue where it's like, what am I actually using this for besides speculation? And that needs to be the next unlock now. We really need builders more than ever to step up to get us back on track. But yeah, we're going to see how a lot of this plays out. I think it's anyone who's telling you this stuff is obvious is it's not, right. So you got to always like study and be humble and willing to learn, and try not to overreact when things are going well, and then extrapolate when they're going bad. Like you got to kind of stay even keeled throughout all of this. And yeah, don't have much else to say, but we'll see how everything plays out.
Yeah, in a world where this is where everyone will quit. This is where you'll see people in content, people, influencers, all sorts of people will give up. The people who stick around, they have really outsized win potential.
Yeah.
People remember who are here. It's the best opportunity to interact with accounts that you felt like were untouchable before. Be the one who's around. If you really want to get a hold of somebody, or you want to connect with somebody or network with them, get in their comments, start engaging them, engage their content. It's going to be a time where a lot less people are engaging. And when they start seeing that person who was riding with them, a bigger account that you've been wanting to get in contact with will respond or will get back to you. Somebody, you'll start to build your clan. So support people during this time. They will definitely remember it. And we appreciate every one of you showing up for the stream.
Brandon, last thing, like during one of these times a couple of years ago, when it felt like all hope was lost, that's when, you know, the whole arena saga emerged. And think about all the good that came from that, and the opportunities. So it's like, you know, sometimes in the darkest moments, there's the most growth, has been my experience. And you got to look for like the positives during times like this.
Yeah, there will be a
What's that?
There'll be a shining star. There always is. Friendtech created the meta that was SocialFi. The arena was born out of that. Massive money and volume was put through those products and that whole new sector. There will be something. You know, AI agents has tested the waters. I have a sneaking suspicion that there will be some builds that started in January that pop up in the fall that are way further along than people expect in the AI and AI agent realm, with very lean companies run with a lot of AI that are producing revenue and are building incredible things. So keep your eyes out. There are people doing stuff behind the scenes that you don't realize. Networking is the way you find out what's going on. Get involved with teams. Maybe there's a way you can help out. But appreciate every single one of you showing up on a Friday. I know for some of you it's later at night, but we hope you have an amazing weekend. You get an incredible couple of meals in. Hopefully there's some summer sun for you.
Arena eats.
Where's that spot what's that spot I love in New York?
The food truck?
Yeah, what's that one called?
I forgot.
I gotta go there in September. So I'll be out in New York in September. That'll be a good time. But yeah, thank you everybody for coming on. We're gonna end here, and we'll see you on Tuesday at 10 a.m. Not So Easy Money is gonna be on. Easy is on stream Tuesday.
See you guys.